Thank you very much for staying with us. In the course of the program, you can tweet at us at Channels TV and at Tempili, CTV Tempili, actually. But now let's begin this segment with the stock market review. It was a full trading week at the close at the local bourse this week, but bearish sentiments dominated activities at the market. The all-share index declined by 0.17% to end the week at 28,805.45. Market capitalization dropped to 9.89 trillion naira. A turnover of 1.14 billion shares worth 13.61 billion naira in 21,868 deals were traded this week by investors at the exchange. Skybank led the week's top losers with 31.03%. Honeywell Flour Mills appreciated by 14.79% to emerge the top percentage gainer. And FBN Holdings, GT Bank, and Access Bank collectively accounted for 30.80% of total volume traded during the week. Now, the state of the market in the last 3 months may not have favored most companies, but that doesn't stop investors from being willing to scrutinize the numbers as market watchers await the earnings of the listed companies this time. This evening on the show, my guest and I will take us back in time to some of the events that may have shaped the results of these companies when they are released. And talking about the second quarter earnings of companies in the industrial, conglomerate, and consumer goods sectors. I'm being joined right now by Dolapo Ashiru, the Chief Executive at Lead Securities Limited. Welcome again to Capital Markets.
Thanks for having me.
It's always a pleasure to have you here on the show. Let's begin with some of the industrial companies that we have listed in the stock market. As a stock trader, what can you tell us about their performances in the last 3 months or first half of this year?
Yeah, it's been very, very challenging for some of the companies in the industrial goods sector. But the three major companies there are Dangote Cement, Lafarge Wapco, and also Ashaka Cement. The fourth is CCNN, based in Sokoto, but they're a fringe player. Lafarge Wapco announced a profit warning about a week ago, mainly because of the exposure to foreign exchange. Basically, they took a facility in dollars, and because of the depreciation in the value of the naira, they had to revalue it and give them a profit warning of about 28 billion naira. So that's a foreign exchange loss for Lafarge Wapco. So many companies in that sector too that have foreign denominated debts also are going to face that issue. They have to revalue their debt because the depreciation of the naira.
But don't you think that quite a number of these companies will be doing better when we see the Q2 earnings? I'm saying that because it was in the last 3 months that we saw some kind of improvements, a little improvement in the economy. We saw that the market recovered a little, and it looks like this is going to add up to their numbers.
Yeah, I'll give you an example of Nigerian Bridge that brought out the results. The revenue increased by 4%, but that's not because they sold more. That's because they had to increase the value or the cost of their products. So their products price went up, so automatically the revenue will seem to go up. And they also have a challenge also of foreign exchange because they, like other companies, also to have dollar-denominated loans because they import part of the input for their products.
But of course, they have started depending on some kind of diversification motives. They've started depending on some of the raw materials being generated locally. How do you think this is going to shape things for them?
Yes, you're right. Many of these companies have started looking inwards for alternatives instead of importing the inputs. And they're going a long way in doing that, and they're making a lot of results. Nigerian Bridge, for example, has gone a long way in trying to substitute foreign inputs with local inputs. So it's helping them, it's helping their bottom line, but many of them still have issues concerning foreign exchange. And they're going to struggle with it for some time.
Okay, well, let's talk to us about how FX scarcity impacted on some of these companies the more.
Okay, I'll give you an example of Lafarge Wapco. Because of there's a company called Unicem that they acquired 100% of that. So to acquire Unicem, they had to take a facility in dollars. You understand? So they acquired it, and when the depreciation came, they had to also revalue the facility. You understand? Even banks also, many banks that have MPLs in foreign denominated loans too have to sort of revalue, and that means that so a bank's the volume of a bank's bad loans, for example, will increase. It's not because they took on more bad loans, or because a significant part of their loans were in forex.
Okay, so we all know that fuel scarcity came into play in this period as well. Do you think that has any implications for some of these quoted companies?
Yeah, at the beginning of the year, there were some headwinds. For example, before we had a lot of issues around FX scarcity, which is now better than before. Right. We also had a lot of headwinds concerning delay in the budget, was a headwind in H1, and also the fuel scarcity also. So it made distribution cost for many consumer goods companies and industrial goods companies higher, because they had to source for PMS or sometimes AGO diesel from the black market, which increased the cost of distributing to the final consumer. And that also, and the petrol scarcity also in each one also affected the consumer, because I mean, I prefer to look at the time I should use to do something productive and spend at the fuel station looking for fuel, and I'm paying a premium for petrol. So that means I want to make sure that I have petrol for my generator this night than for me to spend money on maybe beer or things like that.
Okay, so we haven't seen the earnings of the likes of Lafarge, although they have already issued some kind of a profit warning. We haven't seen Dangote Cement. We haven't seen some of these industrial sectors companies. Basically, if you pick some of these companies, what would you be expecting from them at the end of the day?
For most of them, I'll be expecting a very marginal or flat year-on-year. Like, for example, if you compare H1 2015 to H1 2016, most of them you will see marginal increases in the top and bottom line, but nothing significant, especially companies in the consumer goods and industrial goods sector. I'll give an example of Dangote Cement. Right now, for the past 3 months, companies in the cement industries have been having issues concerning gas. So the activities of Niger Delta Avengers is affecting cement plants, because you can fire a cement plant basically with 3 fuel sources: gas, coal, or low power fuel oil. And but the cheapest source of firing a gas plant is gas. So a cement plant is gas. But when they keep on blowing gas pipelines, it's going to affect the production in cement companies. So most of them will have to look for alternative sources in either AGO or coal. But to use coal to fire a gas plant, fire a cement plant, your cement plant must be near a coal deposit or a coal mine.
All right. Thank you so much, Dolapo. But let's just give our attention to the African markets now before we go on a break. We see the BRVM index currently down at 2.8%, and the year-to-date is 4.5%. Quite a number of the global headwinds have been impacting a lot of African markets in recent time. The EGX 30 is flat, but the year-to-date performance looks positive by 8.2%. And of course, on Nairobi, the Nairobi Stock Exchange was down yesterday, 0.3%. Week-to-date performance is also negative, as well as the year-to-date performance, which is contracted, so as much as 4.8%. The Johannesburg Stock Exchange is about the only one here that has a good week-to-date performance by 2.7%. The year-to-date performance is also 3.9%, which is a very good figure. It's time for a break, and when we come back, we'll continue with the discussions, focusing our attention on conglomerates and consumer goods sectors.